Okay, so I would like you guys to type in your questions on the chat section so that I can have a guide of some of the things you guys would love to understand. I have the presentation right now, like what I planned for you guys, but I'd also love to see what you guys want to know, the few questions that you guys have, yeah, so that I can have a guide of basically what you guys want, like the direction you guys want us to take. So our topic for today is the US stock market. Actually, I didn't confirm if you guys can see my screen. Can you guys see my screen? Okay, let me get like 5 questions before we start. Let me get like 5 questions on the chat before we start. Like 5 questions and then we can start. I can start going through the presentation I have for you guys. 5 questions, let me say 3 to 5 questions before we start. Just type your questions and then we can start. All right, so we're going to start with the US stocks and ETFs. So let me start by mentioning that we have 11 sectors in the US stock market. And these sectors are usually classified using the classification standard provided by GICS, in full the Global Industrial Classification Standard. And what they did is they divided the stock market, rather the US stock market, into 11 different sectors. So namely, we have, as you can see on my screen, we have 11 sectors. The 11 sectors are, we have the energy sector, we have the material sector, we have the industrial sector, we have the utility sector, healthcare sector, financials, consumer discretionary, consumer staples, information technology, communication services, and real estate. So let's go through the various sectors and what they do. Okay, next one, let me go. What happens is that categorizing the stocks into sectors is basically meant to compare the companies that have similar business models. What happens is that when you're investing, you can choose from the stocks within the sectors and then understand how each sector performs in which situation. Because I know some of you guys read my articles. There was an article I wrote about how to invest during inflation. And in that article, one of the things I said, or rather one of the things that I had written was that when investing during inflation, there are various sectors that performed really well during inflation. We have sectors like the energy sector, we have sectors like the energy sector, and there are sectors that will not perform well during inflation, like the consumer discretionary sector. And I'll tell you why the consumer discretionary sector will not perform well during inflation. So let's start with the communication services. So this sector includes telecommunication services providers, as well as media and entertainment companies, ranging from TV and radio companies, and to new forms of communication like social media giants and video demand providers. So some of the biggest stocks in this sector, we have Facebook, or rather Meta, we have Alphabet, we have T-Mobile, and we have Netflix. Yeah. Actually, T-Mobile is one of the biggest telecommunication companies in the US. We also have consumer discretionary. So the consumer discretionary sector covers goods and services whose demand greatly depends on the consumer's financial status. What happens is that these are products that if I'm not doing well financially, I'll not buy. I would call them sort of like the consumer decides, okay, should we eat or should we buy this other product? So that's why they're called consumer discretionary product. And as you can remember, when I was starting the webinar, I had mentioned that this specific sector, the consumer discretionary sector, normally does not perform really well during inflation, because I think that you now have the answer. Because during inflation, guys are let me just say during hard economic times. So during hard economic times, guys will mainly go for the consumer staples, the basic goods, the food, healthcare, all those, food. So guys will make sure, let's first sort out our food before we buy these other products. And that's why that sector will not perform well during hard economic times. Okay. The next sector is the consumer staples sector. The consumer staples sector. Okay, wait. The consumer staples sector, or rather the consumer defensive sector, covers goods and services needed by consumers, regardless of their financial condition. That's the difference between consumer staples and consumer discretionary. So for consumer staples, consumers must consume these goods regardless of their financial conditions. So the sector covers food, beverage, tobacco, household and personal products companies. We also have supermarkets which deal with the staple items. So some of the most valuable stocks in this sector are Walmart, Procter & Gamble, Coca-Cola, etc., etc. Let's go to the energy sector. The energy sector has been the OG of this year, the best performing sector this year. The energy sector covers companies in the oil and gas industry, ranging from oil and gas exploration and production companies to producers of other consumable fuels like coal and ethanol. Some of the largest stocks in this sector, we have ExxonMobil, we have Chevron, and we have Shell. Let's go to the financial sector. Okay, before I go to the financial sector, actually the energy sector has been the best performing sector this year to date. I think I'll show you a list of the sectors and how they are performed after we cover the sectors. So what happens, just something to note about the energy sector. The energy sector tends to perform really well during inflation. Actually, from 1973, the energy sector has had good returns during inflation. Let's go to the financial sector. This is sort of like, I'd say self-explanatory. The financial services sector covers businesses related to finance, ranging from banking institutions, mortgage finance, insurance, brokerage, as well as consumer finance providers. Let's go to information technology, ICT. The information technology sector covers companies in different parts of the technology innovations, and it includes hardware, software, semiconductor, communication equipment, and IT service companies. Yeah. So this sector includes the two largest listed companies in the US. We have that's Apple, Microsoft, and other companies to note. We have companies like NVIDIA, Oracle, Adobe, and Intel. I know some of you guys use Intel and Adobe. Okay, let's go to the material sector. The material sector covers companies providing goods for use in manufacturing, like mining, forest products, construction materials, packaging, and chemical companies. So a good example under this sector would have Barrick Gold, we have Vale, and Sherwin-Williams. Let's go to the real estate sector. So the real estate sector covers companies that basically develop or manage real estate projects and real estate investment trust. So I hope you guys by now, or rather let me just tell you, you don't have to own real estate to say that you're an investor in real estate. You can actually invest in real estate through real estate investment trust, popularly known as REITs. So REITs are companies that own finance income, or these are companies that own or finance income producing real estate in a range of property sectors. So let me give you a good example using the Kenyan perspective, because most of you guys are from Kenya. So in Kenya, you don't have to actually own an apartment to say you are an investor in real estate. You can actually invest in a REIT. One of the REIT that is listed on the Nairobi Securities Exchange is, we have the Stanley Fahari I-REIT, which is currently trading at around, I think, 6 bob. So by investing, you can actually buy shares of a REIT in the stock market, the Kenyan stock market. And that way you become an investor in real estate, even without owning an apartment, okay? Let's go to utilities. Utilities are sectors that cover a wide variety of utility companies, including, let's say, natural gas transmission, electrical power distributors, power producers, renewable electricity companies. Some good examples to mention here would be Next, Era Energy, Duke Energy, and the National Grid PLC. Yep. So having known the sectors, let's look at the 2022 year-to-date returns. When I say YTD, I mean year-to-date returns. That's from January to December. We are December, yeah. So for this year, the energy, as I had told you guys, the energy sector has outperformed all the other sectors, gaining 52.45 year to date. This has been mostly driven by rising oil prices caused by the uncertainties of the Russia-Ukraine conflict. The worst performing sector has been the communication services sector, which has seen the most pullback of negative 38 year to date. So as you can see on my screen, you can see how various sectors have performed in the last 1 day, the last 5 days, the last 1 month, the last 3 months, year to date, the last 1 year, the last 3 years, the last 5 years, and the last 10 years. Actually, there's a lesson from just looking at the chart, or rather at the table we have on our screen. Normally, most guys will tell you, if you want to invest in the long term. And what you guys can observe, in the past 10 years, all the sectors listed here so far have actually had positive returns. Okay, so someone who invested 10 years ago has had positive returns without actually, someone who invested 10 years ago in any of the sectors has had positive returns. It doesn't matter the sector he or she invested in, whether it was energy, financials, materials, they all had positive returns. And that's why guys like Warren Buffett really do well, because they hold shares for long. Like he has held some shares for over 10 years, over 15 years. Okay, so let's go through the performance of the various sectors. So the first sector, the energy sector, so far, year to date has gained 52.45%. The second one has been, most sectors actually this year have not performed well. The stock market has had a really tough time this year, and that's why you see only the energy sector has had a positive return this year. The rest of the sectors have had negatives. Like the healthcare has a -1, consumer staples -1.16, utilities -1.17, industrial -5.86. But in the long run, all these sectors have positive returns. And looking at the table, I think the sector that has had the most return in 10 years should be the healthcare sector. Yeah, it's the healthcare sector. So, okay, I think after looking at the sectors, let's look at the various exchanges that we have. The biggest exchange in the US is called the New York Stock Exchange. The New York Stock Exchange, or rather the NYSE, is a stock exchange located on Wall Street in New York City that is the largest equities-based exchange in the world, based on total market capitalization. Okay, so initially the stock exchange was run as a private organization, but eventually it became a public entity in 2006. So it has existed for quite some time, since 1792. But I think in 2006, that's when it became a public entity. The Nasdaq Stock Exchange is an American stock exchange based also in New York City. It's ranked as the second in the list of stock exchanges by market capitalization, behind the New York Stock Exchange. So Nasdaq stands for the National Association of Securities Dealers Automated Quotations. Nasdaq opened in 1971, and one of the things that makes Nasdaq outstanding is because it provides automated information about stocks. It became the first electronic stock market. So what Nasdaq used to do, it used to provide automated information about stock prices that investors could use to trade stocks on other exchanges. Yeah. So now Nasdaq has formal listings requirements that companies have to meet in order to list their shares on the stock exchange. And well, many of the world's largest businesses are among the 300 3,000 companies that are listed on the Nasdaq. Some good companies I would love to mention that are listed on Nasdaq. We have Apple, Amazon, and Alphabet, and also Facebook. Another common question is, at what time does the US market open? So the two major exchanges in the US stock market, well, that includes the NYSE and the Nasdaq, are usually open at the same hours. So that's from 5:30 p.m. East African time. The reason why I converted the times to East African time, because I'd like you guys to have not to go through the struggle of converting the time. So that's 5:30 p.m. So for today, the market is not yet open. The market will be opened at 5:30 p.m. and that's 9:30 a.m. EST, Eastern Time. And the market is closed at 12 a.m. East African Time. So at midnight, today at midnight. So the market will be opened at 5:30 and closed at midnight. For weekdays, they're not trading hours for stocks on Saturdays and Sundays. And there's also an exception during stock market holidays. So we have various holidays. Some of the holidays, we have New Year's, we have the Martin Luther King. So that's why you guys will find that during holidays, as the HISA app will send you a notification telling you guys that you don't have trading today. So some of the holidays I'd love to mention, let me mention, we have the New Year's Day, we have the Martin Luther King Day, we have the President's Day, Good Friday, Memorial Day, Juneteenth, Independence Day, Labor Day, Thanksgiving, and Christmas. In certain circumstances, we'll have the stock market will close early. That's in the preceding or following market holidays. Okay, so let's look at the various indexes that we have. The first index I want to show you guys is called the S&P 500 index, also known as the Standard & Poor's 500 index. The S&P is one of the major indexes in the US. This is a stock market index that is viewed as a measure of basically how well the stock market is performing. Anytime you listen to the news, especially the US news, for those of you guys who watch Bloomberg, you hear them talking about the performance of the S&P 500. So what happens is the S&P 500 includes 500 of the largest US companies. So when it comes to the major US stock indexes, the S&P 500 index is the most highly regarded as a barometer of the overall stock market performance and an indicator of how large corporations are performing. So, so basically, if you want to understand how the US economy is performing, you need to look at the S&P 500 index. To be eligible to be listed for the index, companies must meet a certain criteria. So some of the criteria should be, let's say, have a market capitalization of at least $8.2 billion. The company must be based in the US. And the company, what happens is rates are given a special treatment, and must have reported positive earnings over the most recent quarter. So let's look at the S&P. I didn't get a good image, but this is just an image to show you the performance. So what happens is the S&P 500 has had an average return of 10% since it started. So basically, if you had invested in the S&P 500 since it started, you would have had an average return of 10% every year. And as you can see, the S&P 500 has gained an all-time gain of over 2,739% gain since it started. Okay, so let's go to, can you buy the S&P 500 stock? No, you cannot buy the S&P 500 stock because it's not a company itself, it's just an index. But you can invest in various index funds that track the S&P 500. A good example, or rather good examples, we have the Vanguard 500 Index Investor Share. We also have the Fidelity 500 Index Fund, and we have the Schwab S&P 500 Index Fund. And also to mention, you can also invest in ETFs that track the S&P 500. And ETF basically stands for an exchange traded fund. And a good example is the Vanguard S&P 500 ETF. And Yeah, the Vanguard S&P 500 ETF, which is listed, which you can find on our app, the HISA app. Its ticker symbol is VOO. VOO, that's the ticker symbol for Vanguard. The second index I want you guys to learn about is the Dow Jones Industrial Average, popularly known as the Dow. So the Dow Jones Industrial Average is a stock market index that tracks 30 of the large publicly owned blue chip companies trading on the New York Stock Exchange and Nasdaq. Here, let me compare the two. So the S&P 500 tracks the 500 largest companies in the US. The Dow Jones tracks the 30 largest publicly owned blue chip companies trading on the New York Stock Exchange and Nasdaq. The index is named after its founders, who are Charles Dow and Edward Jones. Okay, it's one of the most watched stock market indexes in the world because it includes a wide range of companies. Let's have a look at some of the companies in the Dow Jones Industrial Average. I hope you guys can see. I think I'll have to come up with a good presentation, something that I can send to you guys. For those of you guys in our WhatsApp group, I'll compile some good presentation and then send it to you guys. Okay, so some of the companies listed, let me go through, I'll mention the 30 companies. So we have Apple, American Express, Caterpillar, Chevron, Cisco, Coca-Cola, Goldman Sachs, Intel, Johnson & Johnson, JP Morgan, Microsoft, Nike, Procter & Gamble, Visa, Walmart. I've just mentioned the common companies that you guys might know. Yeah. So let me get some questions from you guys so that we can have a discussion. I know I've moved really fast, so I don't mind repeating. So ask any questions you have, just raise your hand and okay. Because no one has raised their hand so far, let me answer the questions on the chat. So the first question is, assuming you want to buy, what are the criteria to look for before opening a position? That's nice. So there's so many things to look at. It starts from the beginner perspective to the complex perspective. And so I think if we were to talk about things to look at, to take the whole day, and sometimes to get complex because there's so many things to look at, but you don't have to look at so many things. So first thing, it depends on your risk profile, your risk tolerance, and the goal that you have. So when it comes to the first thing to look at is look at the various sectors and look at the various categorizations. And when you talk about goals, do you want to invest in a stock for, let's say you want to invest in a stock for capital gains, or rather do you want to invest in a stock for dividends? Those are the first questions you need to ask yourself. So there are guys who, they don't care about the price movement of a stock. They just want a stock that offers good dividends. And so for that one, you just look for a simple Google search, or rather I'll show you guys some websites that I use to get information. So just search for, let's say, the highest paying dividend companies, or rather the stocks with the highest dividend yields in the US stock market, and you get a list of stocks. Also, we have on Kenyan Wall Street, we have various articles that have written, that have materials on, let's say, dividend yield champions. Yeah, you can get basically stocks that have good dividends. When it comes to capital gains now, you need to look at the various sectors. And one of the things you can use is do your due diligence to know how do various sectors perform during various seasons. Let's say, like, you remember during the beginning of the webinar, I was telling you guys, during high inflation, there are sectors that perform well. Let's say consumer staples, healthcare sector, energy sector. So during inflation, you'd go for that sector. You look for stocks in that sector, right? Another thing to look at when it comes to sectors, you also look at various trends that we are having. Let's say after the COP27 meeting, the world leaders decided, let's invest in the environment. That would mean that it would be a good decision to invest in ESG stocks. And for those of you guys who don't know what ESG stands for, ESG stands for environment, social, and governance. So that's another thing to consider. Another thing to consider is your investment style. So the guys who I would call guys who go for value investing and the guys who go for growth stocks. So there's a difference between the two. So value stocks, these are stocks that I would say are sort of like undervalued and are performing way below the market average. And for growth stocks, these are stocks that are performing way beyond or way above the market average. So most tech companies are actually considered to be growth stocks. Actually, most tech companies will be considered growth stocks, and most financial companies will be considered value stocks. Yeah. So you decide, do I want to invest in growth stocks? Growth stocks are good because they will give you short-term returns. Value stocks are good because you can get them at a cheaper price and hope that in the near future or with time, the price is going to catch up with the real valuation, or rather the fundamentals, right? Okay. So any other question? Bob is asking if the session will be recorded. Yes, it's recorded and it will be posted on YouTube. No worries. Okay. Before you guys ask questions, I think in the details of the meeting, I had mentioned I'll show you guys some of the resources to use. I don't know if I can share my screen with you guys. Let me share my home screen with you guys. Let me see. Let me just type. Let me just type some of the websites, or rather some of the places I used to find resources. So normally, personally, I'll use. Let me see. Let me type. I'll use Bloomberg, Yahoo Finance. So for Bloomberg, they have a YouTube channel. The YouTube channel is one of the best channels to follow, like what's happening in the markets and basically everything that's happening in the financial markets. And if you can afford, which they have something called the Bloomberg Terminal. It's quite expensive, but it's good. It's really expensive, but if you can afford it, it would be good to get one. So we have Bloomberg. We also have Yahoo Finance. So for Yahoo Finance, I don't like the YouTube channel that much, but I'll go for their website. Their website has good information. Another website I use is called FinViz. So what FinViz does, it's mostly reputable for having good stock market screeners. And for guys who like to get screeners, so you can just, let's say, narrow down to various stocks. You can just select stocks in the S&P 500 sector, stocks in the energy sector, stocks that have, let's say, small cap stocks, large cap stocks, mid cap stocks. Basically, it has the best stock market screeners. Another website or a resource I would recommend is called TradingView. TradingView.com. Don't mind, I'll send on the chat after I'm done. So tradingview.com is used for charts. So for the guys here who know how to read charts, you can use tradingview.com to look at charts. Let me go to the apps, or rather the apps you can use. You can use an app called Finimize. Yes, you can use Finimize. You can also use an app called My Wall Street. My Wall Street. Of course, the HISA app, so the news on the HISA app. So you guys check the chat. I've sent the resources. So we have Bloomberg, Yahoo Finance, FinViz, TradingView, Finimize, My Wall Street, HISA app, and some good mentions. We have, let me say, we have MarketWatch, and then we have MarketWatch. Let me try to remember another one. NerdWallet. So these are some good websites that you can you can find good articles. Let me also include Wall Street. So for Kenyan Wall Street, some of my articles, most of my articles are on Kenyan Wall Street, so you can find them. So these are some of the resources you can use. Actually, for me personally, what I do when I'm working, because I work from home, I'll put Bloomberg YouTube, the Bloomberg on my YouTube, and just let it play as white noise while I'm working. And then what happens, the thing about news most of the time will be repetitive, so you might not get what they're saying the first time, but with time you're going to understand, because they're going to repeat the same thing. And you find when you do that for quite some time, you find that you have a very good understanding of the market. So for me, my favorite would be Bloomberg on YouTube. That's for basically financial news. Yahoo Finance will be for following the markets, what's happening, and the various classifications. For FinViz, I would use it as a stock market screener. For TradingView, I use it to look at stock market charts. For Finimize and my Wall Street, these are apps on my phone that I use that give me notifications. Yeah, another good app is called investing.com. That's also another good app. Yeah, I think that's it for now. Unless you guys have any questions. Can HISA team consider having a trading web platform apart from the HISA platform? Yes, yes. We're working on that actually. We're going to have that's coming soon. We're going to have charts, everything, just like the normal trading platforms. Yeah. Can I receive my dividends via M-Pesa number direct? Okay, so what happens? Your dividends will be deposited on your HISA wallet. And then after your dividends are deposited on your wallet, you can then send the money to your M-Pesa directly. Yeah. So any other question? So we're going to do a series of more webinars on the same topic. Today, try to be as general as possible and to keep it as simple as possible, because there's a lot to be learned about the US stock market. The market is huge. So I try to keep it as simple as possible. So with time, I'm going to add more things and we're going to learn more. So yeah, two more guys to ask questions or to any comment, and then we're done with the meeting. Okay, so have an amazing week, and thank you for attending the webinar. Thank you so much. See you next week. We'll cover US stocks and ETFs, but we'll go more into the details. Have an amazing weekend, guys.